In Section 2, we'll go over the main requirements of the Bank Secrecy Act, which include the record-keeping requirements, the 3000 log, the travel rule, and the currency exchange log, and the reporting requirements, the currency transaction report, the suspicious activity report by an MSB, the customs report, and the foreign bank account report, and the report of cash over $10,000 received in a trade or business. The BSA was created to create paper trails that would help government keep track of large cash transactions, the movement of money in and out of the country, and wire transfer and check transactions that may not be going through the transactor's own bank accounts. These records and reports, these paper trails, are useful in criminal and tax investigations. Financial institutions were given special responsibilities by the Bank Secrecy Act. We take these responsibilities seriously. A threshold is an amount above which we must obtain identification, keep records, ask further questions, fill out a report, or all of the above. These thresholds require that certain customer information be collected, information that is not required below those thresholds. All thresholds are based on the total amount transacted, including commission. Since the customer may not be familiar with these requirements, it is recommended this information be gathered at the beginning of the transaction, before payment is accepted. Aggregation means that, for reporting purposes, we must treat multiple transactions as a single transaction if we have knowledge or believe they were done by or on behalf of the same person. For BSA record-keeping and reporting purposes, the aggregation period is 1 day. The two main requirements of the BSA are record-keeping, which refers mostly to the log requirements, and reporting, which refers mostly to forms. A log is an official and permanent chronological record of transactions which includes certain details about those transactions, such as date, amount, sender's name and address, etc. Nowadays, we keep these records using computers. Computer software keeps these records and enforces BSA rules. Record keeping includes taking and verifying ID of conductors of transactions. If you pay out or sell monetary instruments, or send or pay out a funds transfer of $3,000 or more, you must log certain information. The information needed at $3,000 and over are customer name, address, government-issued ID, date of birth, and taxpayer ID number. They're triggered at $3,000 by any method of payment, cash, check, or wire, in either direction, purchase or sale, per person per day. It usually takes many financial institutions to get money from one place to another, like links in a chain. The chain might involve an originating institution, an intermediary institution, and a receiving institution. The travel rule is meant to preserve the paper trail when multiple financial institutions are involved in a transfer. This is where the travel rule gets its name. Remember, layering is used as a method of laundering money. The travel rule makes it more difficult for criminals to hide their bread with layering. The travel rule is similar to the other log requirements because it also applies to transactions of $3,000 and more. The travel rule adds a new requirement that an intermediary financial institution must preserve and pass on all data received with the transmittal, and if there's anything missing, transmitter information must be provided to the other financial institutions in the chain upon request. The currency exchange rules apply to transactions over $1,000, and they're triggered by the exchange of the currency of any country for the currency of any other, in any form, by any means, cash, check, or wire transfer. You must include the customer's name and address, and passport number or taxpayer ID number unless received by mail or common carrier. You also must include the date of the transaction, the amount, and, if there's more than one currency involved, the name and country of each currency and their amounts. BSA reporting refers mostly to the forms that we fill out, These forms can be filed electronically. From July 1st, 2012 on, FinCEN will require the mandatory electronic filing of all BSA forms except the customs form. These e-forms are available now. See fincen.gov for more info and bsaefiling.fincen.treas.gov for specific e-filing instructions. The main BSA reports you need to know about are the Currency Transaction Report, or CTR, and the Suspicious Activity Report, or SAR. The Currency Transaction Report is triggered by cash in or cash out over $10,000 per person per day. The information needed at that level are name, address, government issue ID, date of birth, taxpayer ID number, and occupation. The Suspicious Activity Report by a money service business, also known as the SAR, is designed to collect information that might be needed if there's a criminal investigation. It is a confidential form. It is not necessarily an accusation, but it is a report of facts that look suspicious. MSBs must file SARs at $2,000 or over, and they may voluntarily file SARs at lower amounts. The reports must be filed within 30 days from detection of suspicious activity. If you are unsure whether or not to file a SAR, discuss it with your supervisor. Document and keep a record of the discussion for at least 5 years, even if no SAR is filed. When writing the narrative for your SAR, remember the how and the 5 W's. Who, what, where, when, why, and how. And please remember, the SAR is not to be discussed with anyone, especially not with the person who is the subject of the SAR. What we call the customs form is FinCEN Form 105, also known as the CMIR, and its full name is the Report of International Transportation of Currency or Monetary Instruments. This report is required at amounts over $10,000. The customs form is triggered by cash or any negotiable instrument entering the United States or leaving the United States, whether the money is carried by hand or shipped or received. The Foreign Bank Account Report, or the FBAR, is really entitled The Report of Foreign Bank and Financial Accounts. It is an information return for reporting the calendar year preceding, and it applies to all U.S. persons, not just MSBs. The Foreign Bank Account Report, or the FBAR, is triggered by having over $10,000 held in foreign bank accounts or any type of financial account at any one time during the previous calendar year. And please remember, keep all BSA and customer-related records for at least 5 years. This is the end of Section 2. When you are ready, please move on to Section 3.